Hey everybody, welcome back to our ThinkScript class. Good to have you here. My name is Mike Fairborn, and today I want to talk about a brand new candlestick code that I've been working on. It's kind of a multi-layered candlestick, one that often has early reversal patterns, one that we don't actually have access to on Thinkorswim, so one that I've been spending, let's just say, a little bit of time trying to develop. I think I've got a working model here for us, though, and I'm really interested in going through that with you all today. So welcome to all of you. Hello to you, Janelle, Ray, Paul. We've got Life in the Fast Lane. We've got Rocky. We've got Posh and others. Folks, any questions, comments, you have to throw those in the chat. We'll be sure to address those for you. Welcome to you, High Speed, as well. With that, I'm joined in the chat by a good friend, a colleague of mine, Mr. James Boyd. I've happy to call James a friend of mine, and great to have James here with us. Very knowledgeable. And folks, if you want to follow us on X, you can do so. James Boyd CS. Got some great stuff there. Mike Fairborn CS. With that, plenty to discuss today. So let's dive on into some disclosures and get going. Paper Money software application is for general education purposes only. Now, information here is for general information purposes only as well, not to be considered an individualized recommendation or personalized investment advice. Now, backtesting, which we do look at in this class, and we'll do it again today, it's part of what we do pretty frequently here when we look at ThinkScript. Backtesting results presented are hypothetical, and there is no guarantee that the same strategy implemented today would produce similar results. So yeah, the market, it's an open system, always new information flowing into the market. It's not a closed system. It is when you look at it in hindsight, but things can always change, and believe me, as we all know, they sure do. Investing involves risk for some products, including for some products, more than your initial investment. Now, past performance of any security strategy does not guarantee future results or success. I have a little segment of futures or futures options trading. They do involve substantial risk, not suitable for all investors. I like to keep that in there because we do look at futures options. I should say we do look at futures charts. We don't look at the options at all. We do look at futures charts, though. And had to throw some disclosures, so it gives us the go-ahead to do that. All right, well, here we are back again. A lot of fun looking at ThinkScripting. So that is using ThinkScript code to help us find specific scenarios and setups on the Thinkorswim platform that we might find useful. And in many cases, we're looking for potentially earlier signals or setups or price patterns. Gosh, how many things have we done? We've looked at the RSI, MACD, all kinds of volume indicators and things along those lines. Last week, it was, moving averages, which are so helpful when we're looking at price action specifically. This week, we're picking up on another sort of pattern in this case, a price pattern. I think many of you, in fact, I know many of you do utilize candlestick patterns. That was the first book I read on the markets. I should say, well, you can't really say that because my background's in accounting and finance, and so those were really kind of the first books you could say on understanding companies. But in terms of technical trading, it was candlesticks. And this was all the way back, if you could believe it. I mean, I think I read that first book somewhere around 1997 or so, 6, 7. Yeah, it was one of those 2 years. And gosh, I thought I'd had it made. I thought, my gosh, this is, they were only showing examples of when the stock went up after, folks. Stocks can go down too, but I thought, geez, okay, this book is worth a lot. But, they can be really interesting, and they have been noted for reversal points, particularly when you combine some of those candlesticks with each other. And that's what we've got today. We've got one on the platform we've just created a scan for. It's called the Hikake pattern. It's a combination of two patterns that build this together, kind of like the Morningstar pattern. And so oftentimes those confluence of candles can be interesting indications of a development of a change in the trend, a reversal in the direction of the trend as well. So again, folks, we're starting with, what we oftentimes do in this class, are indicators. I've identified the goal is trying to find maybe early reversal signs off price action. Of course, we could always compare that with that zero lag EMA, the ZLEMA that we talked about last week, as an earlier indication after the candlestick pattern occurs, if that makes sense, right? We're just adding one to the other, getting additional form of maybe trend confirmation there. We don't want to forget about indicators we've already learned because they could be useful too. But we want to talk about, sort of an indicator, in fact, a price pattern, if you will. We have a number of price patterns that can be accessed on Thinkorswim, but we don't have this pattern, which is one that actually, a lot of traders will look at. So happy to develop that and show that for you today. These are just some of the steps to think scripting. Can I develop that goal? Where in this class we do outline the steps of the script. We talk about it. There are some advanced concepts in here that I wouldn't expect you to understand from the get-go. Of course, you can read about that though online under the ThinkScript, the manual that we have. Which talks about some of these codes, and I'll show you those as well. But what we do is we test it, and then I share that script at the end, and I do have a scan to share with you. I'm still building the chart itself to show up on the chart. So how you might see the code on the charts. I'm still looking at doing that. I was having some trouble. Even though I had a week to do it, it's tricky to do it, to show it to you on the charts. In fact, what I'm going to do is spend some extra time explaining it here so then you can understand it in more detail. So here we've got a stock here that's beginning to move a little bit. And believe it or not, this one came from a Hikake pattern. I'm going to go ahead and spell this out so you guys have it. Shoot, I could just put it in the chat, right? Well, no, everybody could see it this way on the recorded session as well. But it is... If you guys know Japanese or the Japanese candlesticks, let me know. There's 2 Ks, Hikake, like that. That is the pattern. Let's break it down. It starts off first with an inside bar. Does anybody know what the inside bar is? Let's just talk about it maybe in an actual candlestick formation. The Harami pattern, which means pregnant lady. We do have one right here. This is not a Hikake that formed at all. I'm going to go ahead and show it to you right there. The Hikake is fascinating, how it builds on the inside bar or the Harami pattern, and that is right there. They get that consideration of the pregnant lady is that this bar that follows is inside the prior bar. And notice we have to describe this in detail. These can be interesting reversal points. You could see that it just so happens, and I'm just doing this kind of on the fly right here, but that was a pretty sharp reversal. And there was these big patterns that happen after that point. What's going on here to define it specifically, because that's exactly what we have to do when we're dealing with ThinkScript. We have to describe it to the computer in language, and this code that I've got will help you understand that a little bit better. But here is the prior high day, and here is the prior low day. As long as this bar that we're looking at, this is our focus bar we're looking at, it has to have a higher low, has to have a lower high and a higher low. That is an inside bar. That is a Harami pattern. An inside bar is kind of just like I don't know how to say it, the American way of saying it, using bars as opposed to candles. These inside bars are really quite common. In fact, I was reading some studies that that's one of the patterns that even some of the traders on the floor had used in the past are inside bars for reversals. Here's another one right here. Did it meet the criteria? It sure did. It has a lower high. It's got a higher low than the prior day. So let me ask you all this question. We can see that this fits nicely within the body of the candle. But by definition, I'm going to draw just a crazy looking candle over here just to make sure we're all on the same page. Let's just say we have a really long-term, I don't know, let's say that's happening at the bottom. It's a hammer pattern. And our next bar to follow is a bar that looks like this. Has a little blip there and has a little bit blip there. Based on the definition that we just shared, is that an inside bar? Yes or no? It's outside the body of the candle. It is actually an inside bar. It looks terrible. I'm used to seeing them like this. But by definition, that is an inside bar, and that is the very, very first thing we're looking at here. Okay, I know, guys. I saw a couple no's. For me, I would have thought the same thing, but in terms of an inside bar for the Hikake, that's what we need. We need to have this. And I want to describe what's going on here, because I would have said the same thing, that that's a no, and that's why it's important to get that point across so that when you see these in the scan, you'll recognize, based upon what we told the computer to do through the coding, it's actually working as opposed to being broken. So we went through that portion. Now, what is actually happening here? If I were to break this time frame down and look at it on a really short-term scale, you know why that might be an interesting turning point? For one, we have the beginnings of a change in trend. And what does that trend look like? It's this. So if I was looking at this bar, if I just bump this, blow this up over here, we zoom in on an intraday chart, it's going like this. We might see a move, and maybe we're coming down towards a bottom. And what happens off that bottom is we get up to this point. Here's the prior day's high. Now we're looking at this bar, and what's happening is we go below it. But then we start to bounce. Does that look like the possible beginnings of a change in trend on a short-term basis? Do you see it right there? That's ultimately what's happening behind the scenes on these patterns. You're getting this. You're getting the potential for a trend change occurring here. You do have a lower high right there, but you've got an important element, and that is the higher low. And what are we waiting for the next day? You guessed it. We're waiting for a confirmation break. We're halfway there to a change in trend. Some of the strongest patterns, however, occur when there's a fake out. And the Hikake pattern is all about the fake out and then the reversal, which can actually enable an even larger pattern to unfold. Now, I've got one here, and I was able to find it beautifully just through the scan, because you can go through ahead and you can go ahead and look at the S&P 500, and you'll be looking and you'll be looking and looking. There's a lot of companies there, or whatever you're looking for, and you're not going to find. It's very, very difficult to find, but you oftentimes find it. You guys will see here. You might see some of these same moves, just like I saw previously over here. Let me show you what's going on behind the scenes. So as we look at this right here, I'm going to really zoom in, and we're going to go through this step by step, and I'll show you exactly what our code is doing. And remember, this can be to the upside and the downside. All right, well, that should be big enough for us right there. So let's do it. Here we go. Do we have an inside bar? We do. Okay, now that could mean that the trend is getting ready to establish itself higher and break up to the upside. But right over here, what happens is we don't close above this bar. Okay, we don't close above the high of this bar. This is a very, very crucial bar. That was the potential change in trend on a short-term basis. Instead, we break lower. We extend lower here. You can see that right here. So this is referred to as the fake out. So people get behind these patterns, and what happens is then it begins to break and fake out. Okay, and then what happens is we don't get that inside bar, which a lot of traders could be looking at, and then they begin to sell. This is where the Hikake is formed. You have to have a breakout. So number one, there's 3 points here. Number one, inside bar or harami, effectively. Number two, you got to have the fake out. You've got to break below the low of this bar and actually close below that low, which we had right there. And number three, this is the last one. I'm running out of colors here. Okay, I'll just say this. Yeah, I can't use, there we go. We'll just use this. So we'll carry this along. I'll just go a dotted line. You've got to close. I have it noted as closing, not just trading. And right now, the markets are not closed, but we'll get an indication that this bar has broken out. That in total, in sum, number three right there, 1, 2, and 3, that is the Hikake pattern. Inside bar, break below, you get the fake out, and then you break out higher. So it reminds me in a lot of ways of the Morningstar pattern, where you're getting a breakdown here. You get a downward bar. Let's say that's a downward bar here. Okay. Then you get like a doji. It could be a doji. It could be anything. It could be a hammer, whatever the case is. And then the next bar in blue here is the reversal pattern. This takes it to an extreme. This says, no, this is not just a reversal. We had the reversal. Our reversal was right there. That was our potential reversal fake out. And when a fake out failure occurs, prices can actually move, as a lot of traders will testify. They'll say, oftentimes it can, stronger out of the base. It can actually break up more sharply. But you got to break above the high. So everything we're measuring here starts with that inside bar. Everything. The steps one, one, of course, but two and three are all based on it. You're dealing with the fake out off the low and the breakout on the high right there. Okay, let me show you. Now, the beginnings of this, right over here, let's pull it up. Boy, and there's plenty to look at here, actually. We'll go into the save scans. Actually, I've got to pull it up. Oh, I'm not saved the scan. We'll load it first. All right, so we go into our Hikake right there. I've got a bullish, and I can create the bearish as well just by flipping this guy upside down, basically, is what we can do. Let's talk about it. Anytime you want to do an inside bar at all, simple code. It's actually so simple. It gets really difficult when you get steps 2 and 3 in there. I've been working on this guy for some time now, but let's go through the actual code so you guys can see this. So check this out. Here we go with the code itself. Now, define the inside bar. Let's just talk about that. We had exactly what we talked about. We had the high and is less than, right here, the high of the prior day. That's where that parentheses 1 comes in. In most cases, that is what we're talking about. That is the high of that range. It's like a bar ago is what we're looking at. Now over here, as we're talking about our inside bar, I've tried to put an explanation in some of these as well. The low itself is greater than the low that's happening right now is greater than 1 bar ago. If we wanted to plot this out, we could find inside bars everywhere. And folks, it's that simple. Although this would be challenging, even for the condition wizard to do. I'm not even sure we could do this on the condition wizard, right? I don't think we could. Maybe, but it would be a pain. Look how easy it is with that one-liner. There you guys have that inside bar. This was actually really quite easy to do. I wanted to say too that the way I had built this, and you can build it a number of different ways, but I had a confirm minimum and a confirm maximum in here. And what I was suggesting here is, as that Hikake pattern is forming, let me go back to that, because that's right. That's a key part of this code right here. So let's do this. I said that you have to, and this just makes total sense. I came to this conclusion maybe after the first day of trying to work on this, and that is, after you have this code here, we have one after we break down here, right? After step 2 hits, I'm giving this 1 bar, this bar, all the way to 4 bars before we break out higher. You know why we have to have this in place? Because we have to make sure this pattern is in check. If we give it too many bars, my gosh, it could do something just like this. It could come over here, and let's say we're over here, and over here, and over here, and we still haven't broken above this high right there. And what do you guys see? What do we have on the chart? Well, you have a pretty good downward sloping trend, and before you know it, the trend's changed. And I would say this, after that trend breaks into a new low, just forget that whole pattern. That was not just a fake out. It was the real deal. It didn't fake out. So that's why we give it 4 bars, and that's exactly what I have at the top of that code. Okay, let's go back to it now. Oh, get this off. Okay, so back at our code here, we're going to look at it and scan that out. Let's do it. Okay, so this is going to be useful because we have a confirm minimum and confirm maximum. Now, I don't know if you guys have used compound value before. Compound value, I'll be frankly honest with you, it can take some time. I could do a whole class, actually. I think I could do a whole class on compound value, to be honest with you. I haven't used it too much, but I have seen it used in other indicators. But effectively, first of all, you notice over here we do have the 1 bar. We're looking at 1 bar ago. But what it's doing is it's recognizing the highs and the lows, and specifically stating we have the compound value. Basically, it's the IB from a bar ago. So as long as we can create that expression, we can say now start to count our confirmed bars is what's going on. I borrowed this code, but I worked on it. It was on another indicator, but I figured out kind of how to make it work in, well, not kind of, it does work in our setup here today. But it's a little bit tricky. You're going to find as you go through here, these explanations will help you get through it. You've got a broke now, the close. Okay, so we're talking about the fake out specifically. I've tried to line these up. The close below, that's the inside bar low right here. Okay, and once we have that, we're going to start looking at a count here. So there's a lot going on here, but we could actually have a discussion next week and break down everything if you guys want, and go through it from here. But I could spend basically a whole session doing a couple of these, getting the logic behind it, which I'm happy to do, by the way. But I've tried to put some notes in here so you can figure that out in detail. It's so much more complex when I'm doing something beyond one candlestick bar. Those are quite easy, just like the Cahold would be, very similar to the inside bar. But this is specifically for the bullish. I'm going to go ahead and scan it right now. Let's take a look at it. We'll pull up some of our trades. And by the way, obviously these are going to change anytime we change any of these values in here, which is great. I've left them at the top so you could do it. If you wanted to narrow this down, this time frame, and say, no, Mike, it's got to happen within 2 days, or I should say 2 bars. It is a daily chart we're looking at here. The aggregation's daily, but you could change that right there. I would suggest, though, using 1 at least, because the reversal can be sharp off these bottoms. By adding that 1 in there as opposed to a 2, I was able to get a lot of quick reversals out of the range. So coming back here, this was a quick reversal, super quick. If we don't have that 1 or 2 in here, we're not going to see these recoveries. And so we have 28 that were actually, was it 28? Yeah, I think 28 out of the S&P 500. I want to look at the NASDAQ 100 as well. But let's go through and look at some of these here that came up in the group. And what I'll do right now is I'm just going to share this so you guys have it as I go through it too. And by the way, as I always do in this class, let's go through the process, because there was some confusion last week as well on how to do this. When I share this, I'm just sharing this right now. It'll pull this up. And I'm going to post this into the chat down below as a code, right? And you'll see that code pop up, right? Yeah, and so you copy that code. And by the way, think scripts aren't guaranteed for timeliness or accuracy. Oh, show my chart setting for candlesticks. Okay. My chart setting for candlesticks. Sure, let's do that. Did I just say that, though? I want to make sure I got that point out. Not guaranteed for timeliness or accuracy. Things great, but as long as the data that's coming into the platform is good, it should just mathematically work out. We do have good data there. So just a little side note there. And by the way, that code that I just posted, I will have this in the description section in the archive video at the bottom. You just want to click on more below the video. Now, how do we get the candlestick charts in here so we can get candles? Oh, that's a good question. I just assume, hey, we all have candles, and that's a bad assumption. Now I'm going to click on, I'm on charts. I'm going to click on the wheel right there, the little gear icon. And I'm going to go under appearance, and I'm going to go right here under chart type. What did I tell you guys? I told you the first book I read was Candlesticks. Now, how could you guys expect me to use bar charts if the first book I read was candles? You can't. No, it's there. It's right there. And you'll have it. You can make some changes. I just have the black, excuse me. I like the black background a lot. I think you can see the colors very clearly. The black and reddish show up, but you can change any color you want. By the way, the first book I read, it was black and white candles, black being down, up being white, and it was on a white sheet of paper, of course. And so this is easier on the eyes for sure. But there you go. Is that what we were after? Oh, can you use candle trend? You sure could, Giselle. That's a different topic, though. Maybe you could tie that in with what we're talking. I don't even know. Maybe would that show up here? It might. I think it gives the size and the weighting of the candle based on volume. But all right, we got that out of the way. But that's a good point. We need to make sure you have that. Now, for everybody that's watching, take that code, and what you want to do is go into Setup up top and click on Open Shared Items. Put that code in. It'll automatically. I'm just going to Control V to paste it. Command V if you're using a Mac like James, and you put that in, and now you just click on Preview, and now you go over here, Import Item as, boom, right there. Throw that in, just like just like Hikake Bullish scan, for example, something like that. Hit Import, and that way you know how to find it. And you know you're going to find it. It's a scan query. So then once you do that, I'm not going to do it because I've already got one. Then you come over to the scan, and then you go over into the load. You got to be in the scan, by the way, gosh, you got to be in the Scan Hacker, Stock Hacker too. Scan, subtab Stock Hacker, over here to the right of Add Condition Group, click on our hamburger icon, go down to the second one, and you'll find it there because you just saved it. And you know exactly the name of it too. All right, so we had a few comments in YouTube saying, hey, nice, I'd like to be able to use this, but how do I do it? And that makes sense. So there you go. That's how you do it. I promised I'd go through it, and there we go. Okay, let's go through some of these, though, into the fun stuff. Now that I've shared it with you guys, and if somebody could confirm that it's working for you as well on this, and you can see it. I'm going to go through a few examples here. We're going to place a trade as well, a sample trade here as we go through it. Did you notice over here there was right in the middle, yeah, Allstate. I'm just curious what this is kind of fits into the financial group. Financial has been one of the stronger group. Gosh, we got some other financials in here too. Wait, let's just see if we could spot it with Allstate though. Okay, and a fairly decent follow through, right? But we're getting it early on that bar. Now, where is the inside bar? There are actually two. Remember that code I was showing you guys about? This is like way down the line as I was trying to get a better feel on all the ins and outs of the code, that I realized I'm getting one here as well. But notice that's not the one. We have to set it in place. Compound value in some of these will freeze that. So as soon as it hits, then it starts looking for the remainder of what we were after. And what was that? The breakdown and then the break up. If you can't freeze the code, you're going to get another one here, and it's going to erase the prior one. This is an excellent example of how you've got to talk to the code so it knows exactly what you're trying to do. You have to have that in there. That's the problem actually with these multi-candles is, shoot, if I get one here, it just cancels out this one and starts with this one, and I never get to see what's going on because this right here is not a Hikake. This is not a development. Did we break below this low? No, it is an inside bar, but that's not what we're after. This is a 2-for-1. You guys get both today. You get the inside bar and the larger candle formation. So there's the breakdown. Did this happen within? After the breakdown, and this bar here, was it within 1 to 4 bars? Yes, it was. Yes, it was. In fact, we were able to break. We would have one, actually, we have one more bar to make this move occur. But folks, what we're looking for are early, potentially early reversals off this. Remember, nothing's perfect here. We could take a look at, let's see, like that exponential EMA, the zero lag EMA, and see if we're getting a break above that level. I guarantee on a bar like this, well, I think we would. Yeah, it's probably safe to say prices would be above that bar on a zero lag right there. But that is the bounce. Now, the expectation here is an extension of the trend, is what a trader might be thinking. And they might be looking at other indications too. But it's got the fake out, inside bar fake out, and breakout all in one shot. Folks, you get this across 500 companies. right at your fingertips. Thank you, Giselle. Chris for confirming that. S. We've got Richard, Jim, and Chicken Little. Let's see. I don't know what I'm doing wrong. Oh, well, what portion? I want to make sure you're all on the same page. Let me go through it again as well. Did you get the code, Chicken Little? It was put into the chat, and once you get that code, copy it. Okay, copy that code. Go into Setup, open Shared Items. Paste that code in. I still have the code there. That's the code for the scan. Click on Preview. Name it to whatever you'd like. You know, probably something that defines exactly what you're after so you know what it is when you see it. And go to Scan and just simply go into Load Scan Query and find it. You'll find it right in those personal files over there on the left. I've got so many of them, they had to put them, you know, in sort of in alphabetical ranges there. But there you go. So that's it. It's only about those 4 steps. And if you run into any issues too, you could just check that portion of this recording out as this goes through a process of being recorded. Folks, if you're finding value from these presentations, if you're using candlesticks, things like that, go ahead and smash that like button. Lets me know, and it also improves kind of the reach of it as well with the YouTube algorithm, if you're finding value, of course. Now, I'd love to have you subscribe too. So off to the right-hand side of just your YouTube page there might be a little subscribe button as well. Subscribe that if you'd like to be part of our Trader Talk channel. We'd love to have you on board if you're not already. I know many of you are, so just keep that in mind. Oh, Jim, you couldn't rename it? Okay, so real quick, let me just show you that rename again so you got it. Want to make sure you guys get this. It's right down here under Scan Query. Okay, so it just names it this, and you notice what it is. It's just Scan Query followed by the year, the month, and the day in that order. Just erase that guy. I just, copy it and just type it in, whatever it is, put it in there, hit import, you're good to go, and you'll find it there. But that's where it's at. You can't rename this because that is the URL itself. It's down here. You're importing it as that. Should work. If not, we might need to reach out to Thinkorswim just to make sure if there's not a tech issue involved there, okay? Okay, cool. Let's look at some others. But that's the context of Allstate. And let me state this. Let's step back and look big picture at this. This was a fascinating reversal. It reminds me of another stock that we put a trade on in our swing trade class. I'm going to pull that one up next. See this? Are we in a range here? We're in a range. This is a long-term range. This is a 1 year. Whoops. Slid off the side. It's right there. So it's kind of a sideways channel. Look at this. In that channel, something we hadn't really done before. Higher low and another higher low. How might have we gotten that higher low? Could that candlestick have been a strong reversal there? Yeah, it could have been. And that's what we're looking for, are those sharp reversals. Because ultimately, we're seeing if we can break above this upper range, because that's kind of a sweet, a measured move to the upside. If we were to take this and break out to the upside, in fact, I'll just show you a weekly chart to do that, it could be quite interesting. We've been here for a long time. Folks, this is all year. This is going back to, it takes us back to almost Thanksgiving of last year. We're basically at these same levels. But you'll notice that we just picked up on that, a higher low, possibility of a breakout and a run. Rates are getting lowered. That can help. Well, they just got lowered yesterday. There's an expectation. The medium range is another 50, what they're calling right now, or the middle range, is really about a 50%, 50 basis point cut towards the end of the year. That's why I'm thinking about these right here is a possibility of maybe there's some strength behind them on the breakout. But could we now challenge this and break out? The last breakout we had, we don't know if we'll get this, but it took a long time to develop as well. That was a nice breakout. Will something like that happen? These are things that traders might consider. Now, looking at this, let's go back to it. This is a trade we did in the swing trade class on Tuesday, and we just said the same thing. There's your range over here. It looks so similar to Allstate, actually. But you notice something interesting about Intel? Previously, when we came up to our range, folks, we dipped. We came up, folks, and we dipped. And we dipped. Well, this time we came up to our range and we made a higher low. Okay. You know what you got over here? I don't know if you got a Hikake. You came dang close. But anyways, that's the gap up today. Now, nobody knows about news that's going to happen like that. In fact, that wouldn't happen. But there's a joint sort of a agreement working with NVIDIA on AI and some other things, and had the gap. It hit our price target, that's for sure. But and it knocked it out because that was one of the trades up top. But anyhow, similar, right? It's similar, and we got something very close right towards the end of the move. Now, we don't know if we'll get that, and some people would like to wait for it to break out higher. Let's look at some others here and just see what we've got. A lot of financials in here, but what about something, my gosh, yeah, tons of financials. Giving you a sense. Look at all the Hikake patterns here. W-Day, Workday even. Now that's software, right? Let's see. Oh, yeah, application software. And another one, Palantir's on there. The first one we looked at was actually Coin, but let's look at PLTR. Okay. There it is. There's the follow through, and that's the beauty of this is you're getting kind of a confirmation day rally as well. That's your inside bar. Ooh, inside bar's right here. And it had just the bare minimum of what we needed. Inside bar, there's your close lower and your close higher. Fake out. Man, those candles are big fake outs too sometimes. But that's actually like, well, that would be 3 patterns, right? Inside bar, hammer, combined all in one as a Hikake pattern, your breakout, showing some strength. I've seen these right at the bottom though. There are a few that happen like right at the bottom. It's very fascinating how those will work out. Let's see. The other one was, oh, Workday. Yeah, W-Day. Okay, this broke out. Well, the Workday was in there. I'm not seeing it. Oh, right here. That is your candle. There's your breakout. And we have we can look back over a couple of days and just see where we're at. But that was strong enough actually right there to break up and kind of hold those levels. Now, will that mean something going forward? We don't know, but these candles can really kind of help out with that price action quite a bit. All right. See, James said, yeah, this is like a failed break of support and then a snapback. Exactly. So it's the fake out confirming back rally through. But it starts off with that inside bar. And yeah, it's one of those that's a little bit more tricky, I'd say, to develop. But the cool thing is we have that ability with ThinkScript to do that. All right. I'm just going to do another range over here. Communications equipment, FFIV. FFIV. See where we're at right there. Okay. So in a lot of cases, if I'm looking at this, do you guys also see the possibility of a flag pattern unfolding? I mean, this could be also construed as a flag pattern. But the difference here is, if you were to get that, Hikake is giving you the confirm follow through, at least that some will look for. It's a confirmation that you're breaking above these highs. Is it a confirmation that you're going to go higher from here? No. It's only a confirmation that you broke above that high range right there, that you were forming that inside bar on right there, and there's your breakout. So you're getting that as well. I'm going to go back to Allstate, and we'll just look at this guy right now. And I know that prices have gone up. Well, that's kind of a lot. Anyways, I'll tell you what. You guys take a look at these. If you wanted to put a paper trade on here, it could be interesting. I hope. Yeah, this could be interesting to look at. And if there is enough interest behind it, what we could do is we could put something like this into a Market Watch tab as well. Okay, there's one as well. Ooh, many of these are just right up towards highs. It'll be fascinating to see if we see the strength of this now kind of start to power through these highs, because look at this. We're getting these higher lows again as we're getting up towards those resistance levels. It's that inching up higher that could be so interesting. Crazy to see those patterns as a part of it. But again, we'll have to see how that unfolds. Okay, awesome. Well, Janelle says it fantastic. That's the whole idea, right? just to see it and then be able to use some of these Think scripting tools to find it quickly out there. All right. Well, we did one on the daily chart, but again, we don't want to forget all those other indications that we're getting here. But hey, it's a unique candlestick pattern, and I wanted to make sure that you guys at least had access to that. You can add it to your mix of additional price patterns. In fact, if you go over here, there are patterns. I think we've got like, here are the select patterns. You'll notice it's not in here. We don't have it within Thinkorswim, but there are a number of them here. These are more like just individual type patterns. Oops, sorry, I'm looking at the candlestick right there. Okay, so these are some in here as well you can look at. Specialized one with a culmination, I should say, yeah, just accumulation of candlesticks with it. But all right, everybody, that's what I had for you today. Have fun with a code like this. And hey, we'll look forward to future discussions with you. Good to see you all. And thank you so much, JB, for your help in the chat. As always, there is a survey link as well, folks. If you get a chance to fill that out, that'd be great. There's just 2 questions. And so, yeah, I read those. My manager reads those. You know, if you're able to do that, that'd be fantastic. You have to click on it while our discussion's still going, though. So in order for that link to work. But on that note, see you all next time. Bye-bye.